What is up, Eagle Investors? Welcome to another episode of Eagle Investors Market Recap. And in this episode, we'll be doing a deep dive into what's been happening in the market over the past week, specifically focusing on specific relationships between the gold and dollar, along with key economic data points that I'm following, earnings reports that have come out during earnings season, as well as the volatility that we've seen over the past week with the election coming up soon. One thing that I wanted to focus on before I get into the episode is making sure that everyone keeps in mind position sizing. When it comes to trading, it's important to not necessarily have over 5% of your portfolio in one specific company or one specific holding. If you're trading options, make sure that you're trading small, especially with increased volatility. You can see some of these trades go against you very fast. And one thing to keep in mind is also having a tight stop loss. That's what a lot of our day traders are specifically focusing on right now. With that stop loss, you can protect yourself from getting additional losses, and it helps you from also not necessarily losing your whole position as well, especially now. Now, in terms of key economic data points that I've been following over the past week, we saw US initial jobless claims actually come lower than expected. So that shows that we're seeing some recovery in the economy. The main thing to watch for is with elections coming up, what side is going to get elected? Are we going to see a blue wave in Congress as well as a Democratic presidential candidate? Or are we going to continue to see the same? The markets themselves over the past few weeks, they were pricing in a blue wave, hoping for increased stimulus. For example, they're looking for a $2.2 trillion stimulus bill in the next few weeks if there is a blue wave, as well as potential for over $5 trillion along Joe Biden's term if he were elected. Now, on the Republican side, there were the expectations of a $1.8 trillion bill on that side. So it's to be seen what kind of stimulus bill that we will see, but that will be after the elections. So we have to first get past that stage. Now, in terms of the dollar, we actually saw the dollar weaken last week, and then it's strengthened a little bit during this week. The key reason for that is within Europe, we're seeing an increase in coronavirus cases, and as a result, we're seeing lockdowns, whether it's in Germany or France as well. So with European countries putting tighter restrictions, you might see an increase in the dollar as long as the United States is not putting increased restrictions as of now. The reason the dollar does well when there's increased uncertainty is the fact that the dollar is seen as a safe haven. And one reason why it might not be considered a safe haven in the next couple of weeks is with the election, there's the increased uncertainty of whether we'll actually get the election results in time, and will they be truly accurate. Is there the possibility that it might come down to the Supreme Court to decide who the presidential candidate is if the ballots aren't able to be counted properly? So we could see some civil unrest and more uncertainty in the markets would potentially mean an increased downturn in the markets as well. So in terms of what's been happening with gold is as the dollar rises, you're seeing gold go down, as well as with the markets falling this week, we saw the S&P 500 drop over 5.5% since Monday, and it's only up 50 basis points for the year. So with the markets falling over 5%, you see that aversion from any assets into cash itself. When there's true fear in the markets the beta of all assets equals 1. So you're seeing all these assets being sold off, and then you're seeing investors flocking to cash instead. And that's been a trend many times in terms of during right before the election or immediately right after the election, because there's immediate uncertainty onto what can happen in the markets. Now, in terms of earnings reports over this past week, one earnings report that I wanted to point out in particular is SAP, a German software company. Essentially, they reported earnings and they did not give out guidance, and management admitted that they were uncertain about what would happen with company sales with the pandemic going on. So that spooked investors, and the company fell significantly after reporting earnings. Another company that recently reported earnings was MasterCard, and MasterCard's earnings didn't meet expectations, with there being increased probes against the company, as well as a decrease in consumer revenues as well. One company that actually surprised and posted a profit was GE. GE reported a surprise profit, and they're seeing operational efficiencies that are leading to increased cash flows as well. So that was something good to hear from that side. Microsoft and AMD reported great earnings. AMD actually decided to buy out Xilinx, and through that process, they're increasingly competing with Intel, specifically within the data center side. So this acquisition is very big for AMD, and it could mean higher market share in that space as well. Now, in terms of the Eurozone, like I said before, you're seeing increased coronavirus cases, and with mitigation efforts increasing throughout Europe to help curb the spread of the coronavirus, you've already seen service PMIs dip below 50. And if the service PMIs dip below 50, that means managers are expecting contraction in the services space within Europe. And this was before many of the more strict measures were put in this week. So we could see a further decline in European services. And it is to be seen if we could see a decline in European manufacturing as well, if there's a reduction in activity throughout Europe due to the virus itself. And that's also something to keep in mind within the United States. There are talks that there's a potential second wave that could happen, but it's to be seen if we would see stricter guidelines or stricter mitigation measures. My personal opinion is we won't see anything as strict as compared to Europe as of now. Now, in terms of the VIX term structure, we're seeing the VIX futures curve be in backwardation. So what does that mean? That means that investors are buying up contracts in the short term because they're expecting increased volatility, while in the longer term, they're not expecting as much volatility. So you're seeing the spot price be significantly higher than the November contracts. So that's something to definitely keep in mind. We could see volatility continue to rise, especially going into elections, if there isn't a clear-cut candidate that is able to be that can be chosen on election day, and if it's going to be drawn out, and if we see civil unrest. And if the more uncertainty that we see, that could actually be very bullish for gold itself, because it could be determined as more of a safe haven over a longer period, if we see a longer period of civil unrest. And if we don't see anything, if we do get the candidate on the exact day and everything's running smoothly, then we could see gold actually go down from here. So those are some things that I'm following. Make sure to join the Discord server if you have it. It's going to be linked below in the description. And if you have any other suggestions, feel free to comment below or reach out within the Discord server as well. Within the Discord server, we post multiple different alerts. Our traders have been doing a fantastic job with the increased volatility. They've been playing it safe in terms of having tight stop losses on their losing trades, and their winning trades have actually run up significantly. They're being very careful right now. They're including hedges within their own portfolios and helping members come up with specific trades as well. We're going to make sure to continue to post content for everyone within the server over the next few weeks, as well as make sure to continue to post updates, whether it's specific earnings reports or specific things that we're focusing on the markets itself within the Discord server. So make sure to join. It's completely for free, and you get a 7-day free trial. And if you haven't already, ring the notification bell and subscribe as well. Thank you so much. And that's it for today's episode of Eagle Investors Market Recap.